Welcome back to Withum's video series, The Alternative Route. Here with me today is Rich Fuchs, Financial Services Audit Partner for Withum, and Peter Tarrant, Managing Partner at Pilotship Partners. Rich and Peter, thank you both for joining us today.
Thanks, Colleen. Good to be here.
Likewise.
So today we're going to pick up where we left off after our Financial Services Symposium back in December, which was right after the presidential election. Peter, fast forward from there, what are you seeing at the end of February, and has that changed at all from the outlook that you had right after the election?
Yeah, I think it's changed a little bit. We're seeing a pickup in activity. Investors are more engaging. They're more interactive. There's more introductions happening this quarter than last quarter. I think, this is the same thing that I was sort of hoping would happen. It was incredibly hard in the third and fourth quarter last year. I think people just didn't know what to do, didn't know what the outcome of the election was. And once we got past that, there was a little bit more comfort, a little bit more visibility on sort of the long-term rate picture. And that's got some money moving now.
That's great. Are there any strategies you think that are better positioned for growth from what you're seeing?
Well, credit remains very popular. Markets were very beta driven in the first Trump administration. And so I think there's still a lot of strength around the long only demand. There's a lot of dispersion, it feels like, in the market. So that could bring light back to sort of some long short strategies. I'd say credit long only, and maybe some sector focused long short strategies.
Rich, how do you think the state of the private equity market has impacted what you're seeing as it relates to the hedge fund space?
Yeah, thanks, Colleen. I think what we've seen a little bit is just that the money that was at the PE funds was tied up a little bit, and so the fund space, the hedge fund space, was struggling to get some of those funds flowing into them as a result. And so hopefully, now that's going to loosen just a little bit, and funds will be able to have a little more access to that capital and be able to ultimately launch.
And for both of you, I guess, have you seen artificial intelligence impacting fundraising, or is it really too soon to tell where that's going to impact that role?
Well, I'd say on my side, people talk about it a lot. And I get solicited a lot about how it's going to help me do my job better. I know from the things that we do, there's so many rote exercises that the opportunity is massive. It hasn't shown up in a way where I can say, oh, this fund raised a lot of money because they had, a lot of AI help in their infrastructure, or that this fund raised a lot of money because it was AI focused. If anything, one of my tech funds said stop using the word AI because it's so ubiquitous, and it's actually not a differentiator because everyone is calling themselves AI. So I'm still waiting for the technology to come along to make my job easier. I still spend lots of hours every week and every month doing things that probably I shouldn't be doing by hand. And as soon as I get my hands on something that does it better, I'll be using it.
Yeah, I would agree. I think, a lot of it is, it probably falls under that too soon to tell category that you mentioned, right? And I think, maybe for more of a data analytics and leveraging AI to kind of parse through some data and things like that might be where it's being helpful, but ultimately it's too soon to tell how it's actually, making a positive impact at the moment.
As far as fundraising, for emerging managers versus institutional funds that are raising, are they dealing with the same issues or challenges, or do you see them having very different paths, and what's impacting them?
I personally see very different paths. Like if you look at this firm, Blue Owl, that has been like eating the market and buying up different strategies, they look like they've hired maybe 15 marketers in the last 6 months. I mean, the approach to the market with a big wallet, with a big fund that's doing a lot of different things, it's the difference between, a single person and an army. I think that approach is different. The money's there for these big entities. right? All the money that people read about, every fundraising story in Bloomberg or in the FT, it's it looks like there's a lot of fundraising, but it's really happening in this 1% or probably 1/4 of 1% of the AUM funds. For the emerging managers, it's really tough. It's you need to outsource as much as you can, and you need to keep your runway as long as possible. And it's imperative that you have great performance.
Yeah, I would agree. A friend of mine was just down in Alts Week in Miami, and he's an emerging manager, and so he was able to get a number of meetings. But again, for him, it's a lot of that grind and being there and making sure that he can get in front of those people, and no one's really just handing him checks, right? It's I think the larger institutional guys, those are the ones that are having the success, and he's, to your point, Peter, I think it's looking at that runway and saying, well, maybe I wanted to launch in June, but now maybe it's Q3, Q4 of this year, because that's when he'll start seeing that funds flow.
I saw a great manager, Colleen, that's an emerging manager at the iConnections event. Um, and they've been in the market for 2.5 years, so they're finally getting traction, right? Like, but it's been a slow race, and I think the best thing that manager's done is gone to a lot of conferences. So now at iConnections in Miami, he's seeing allocators for the fourth and fifth time. That reinforcement, that visualization that I'm still here, I'm still working. Oh, my AUM is up significantly from the last time we saw each other, is really helping those conversations. So you have to last a long time. You have to invest in conferences. You can't sit in your office. You're going to have to go. You're going to have to basically go meet the money.
It sounds like the path to launching may be a little longer, but we're seeing some opening up in the market as far as fundraising goes.
Definitely.
It'll be interesting to see what the second half of the year looks like. So thank you both for joining us today with your valuable insights, and stay tuned for our next episode of The Alternative Route.
Thanks so much.